Ahmed. Welcome. Uh, Everyone, I have Ahmed here. He's the founder and CEO of Biconomy. Thanks for joining me for coffee. No, that
Thank
was
you. Thanks for the coffee.
yeah, of course, no worries. First, I just want to welcome you and thank you for joining me today. And I want to start off by asking what I normally start off asking, which is, how did you get into crypto?
Hey, thanks a lot, Iman, for bringing me on. So the way I got into crypto was actually super interesting. I was studying in China. I was studying Mandarin, and I remember clearly it was like 6 months in. It was sort of a 1 year Mandarin course, and 6 months in, I was like thinking, okay, what am I going to do with my life? I think I flopped an interview with Google during that time, so I was meant to have like a Google internship in summer of that year. And I think I flopped it, and I was like, okay, I need to like find something different or just like explore. But I was
in engineering at that time.
It was actually more so in the client relationships and sales. I believe.
Okay. Yeah.
I was in China, and it was funny. It was like interviewing for a Middle East role. So I remember clearly, so this is like January, February of I think 2016, and managed to sort of like find a couple of meetups, and one of those meetups was a Bitcoin meetup in like the heart of Shanghai, where I was studying, and I sort of went into sort of this meetup, and I was like listening to this project which was called BitC. Now it's called VeChain. And like sort of the two co-founders were talking about putting Louis Vuitton bags on the blockchain, and I was like, oh, what the hell is going on? And then this crazy American dude went to the whiteboard and started talking about Bitcoin and like drawing charts everywhere, and I'm like, what? I've heard of Bitcoin, but like, what is it really?
Right.
And I just loved networking with those individuals and those people, only because of the fact that they were very smart. They were very respectful, very approachable. And it was like one of those things where it was like, could learn a lot. And I thought, this is something that's really interesting. And also coming from an economics background, when I started looking into Bitcoin, I was like, oh my God, like this makes a lot of sense. And so, because when I studied economics back in university, they didn't really teach us the history of economics and how, how the current currencies that we use day in day out, how it actually originated. Right. Once I learned that, then the theory of hard money and what a stable form of value would really mean. And so of course the 2008 financial crash and all of that just made way more sense in the context of the 1971 Nixon shock, right, where the dollar was depegged from the standard. And so that was really the entry point before I got way deeper in the rabbit hole.
Wow. So 2016. So you were a part of the last bull run, but not there like in the earliest of days. And how did it feel? Like, how long did it take you to start actually getting into? Because I feel like there's that bit where heard of it and then you start to get into it, and then it's like, okay, wait, I went completely down the rabbit hole.
Yeah.
And how long was that kind of?
I would say so that was like Jan Feb, and I was like doing some research. I remember this 1 year thing in China was a government scholarship.
Okay.
The beauty of it was I could extend it for another year.
Okay.
So, and then I managed to like find an internship with a Chinese company based in Shanghai, who was doing blockchain stuff. And so it was around May or June time where I decided, hey, like I actually want to do this full time.
Yeah.
And 1 year of Chinese studies is not enough. Let me do another year of a scholarship, because everything is free, right?
Right.
He says no to free things.
Why not? Yeah.
And so it was really from, I'd say, post summer, so maybe August of 2016, where I was like, yep. And this I also went to DEF CON as well, which was in Shanghai, so that I was exposed to the Ethereum community there as well.
Yeah.
And so like just from there, I was like completely in the rabbit hole. Everyone was like, what is this Bitcoin thing? Why are you doing this Bitcoin thing?
Right.
Bitcoin, and
You were applying for jobs at Google, and now you're doing imaginary like tech stuff. Yeah.
yeah. Yeah, exactly. And so it was interesting only because of the fact that, like, for me, I'm just happy that the economic background that I spent, like that investment into university,
Yeah.
actually paid off into me, fully having conviction into Bitcoin and the ecosystem.
It paved your way
Otherwise,
into that.
otherwise all that debt is like, just in vain, really.
Yeah, just another college degree.
Yeah.
And how did your experience end up paving the way for you to start to understand like the decentralized applications and the way that the tech starts to work in order to kind of like come up with the idea for Biconomy? Actually, maybe you want to start off by like explaining what Biconomy is and what solutions or problems it tries to solve, and then kind of circle back to like how you ended up being like, oh, okay, there's something here. There's a serious problem. This is the best way to go about solving it.
Sure. Yeah. So so Biconomy is a developer platform which basically makes Web3 applications, decentralized applications, way more easy and just simple to use for end users. So essentially, we target developers, the dApp developers, who will create, just simpler Web3 products for their end users. Now, how we sort of do that is we've created something we call a relay infrastructure network, which essentially targets and solves problems at the crypto transactional layer. And what I mean by that is, things to deal with gas, with complicated transactions when setting up a wallet and actually going through that sort of hurdle of actually interacting with a smart smart contract within a dApp, right?
Okay.
And so the first product essentially which we wanted to basically give to developers to help them solve a particular pain point was removing this gas friction away from end users. So an analogy I do like to use all the time is, Netflix doesn't charge you the AWS bill every time you watch a video.
Right.
So why on every dApp you use, you'd always have to like pay gas, right? Like this thing should be totally gone, or it could be repackaged in a different way.
Yeah.
And so for us, we're just like, okay, let's just remove this gas thing, and get developers to pay these fees on behalf of their end users.
Okay.
And that way you have, way more retention and lower drop-off rates from end users. So that was like the initial, starting point. And this is all called meta transactions. This is the sort of the technical term for this.
Yeah. Okay. So basically, so if you're a dApp user, what you're doing is you're using this decentralized application, and every time you use this decentralized application, you end up being charged a very high fee, and this is called a gas fee. It's usually paid in Ethereum, and this is super inconvenient for the user. And so you saw this and you're like, okay, this is going to be a huge problem. Nobody's going to actually end up adopting any of these decentralized applications, no matter how great they are.
Even if it's cheap, right? So when we started, Ethereum gas fees weren't so high. So we're not in the business of, completely like saving 90% on gas fees. Yes, we could optimize maybe up to 40%, but optimizing, let's say if a gas fees are $100 and paying $40, that for most users that's still expensive. Yes, we could help the whales.
Right.
But the idea is more so we're trying to sort of build something where we're basically building the future we want to see, in the sense where gas fees will become low in the future. Like Ethereum will solve it, somebody else will solve it, layer 2 will solve it, and we'll get into that later. But once gas fees are low, developers will pay for it because they know it makes sense for their underlying. Yeah.
It's like you said, exactly that. Like, so now instead of having the customers or the end user paying for it, then you're just going to have the developers or whoever's creating this decentralized application pay that bill in the way that they would pay their AWS bill, their Azure bill, their Google Cloud bill. Yeah, no, that makes sense.
And even you could have sponsors like, this coffee place, right? Even sponsoring gas fees, right? They could put up a GIF, right, just before a transaction, and this gas fee is being sponsored by this company, Nike, Starbucks, whoever,
Right.
and then the end user would go on about, doing whatever they want to.
Yeah.
So again, that's another way of repackaging gas, right? I mean, we're not, this could be a potential product in the future, but it's something that if everyone comes into the blockchain, I'm 100% sure there will be some companies wanting to do that, right? The
Right.
decentralized folks, of course, that's against their whole ethos.
Yeah.
But, as more and more people come and actually adopt blockchain and decentralized applications, we'll see way new models coming out to repackage UX.
Yeah.
Yeah.
No, that makes sense, because you're right, because this is a problem that unless like the actual tech infrastructure through, the different layer 2 or whatever comes afterwards actually solve this on their own, it will always be an issue for everyone. And so when did you get started with building this, and talk to me a little bit about how you kind of got started with building a blockchain company, finding the team, finding the developers, creating the idea?
Yeah, so it's funny. So I was actually working with Jabbar Internet Ventures
In Dubai.
in Dubai. So these are the guys who basically created Maktub.com and Suq.com and have so many amazing companies which they've successfully exited.
Yeah.
And they were looking into blockchain and STOs, and I was sort of working with them on that for, quite a couple of months. And it was during then, on my spare time, me and my friend, and we managed to find a technical person who is now our CTO. We basically wanted to do staking. The idea is that we had Tezos. We invested in the ICO like a couple of days ago, and so we're like, okay, Tezos now has opened this proof of stake, DPoS, delegated proof of stake, and now anyone with coins could sort of be a delegator. Be a validator. And so we thought, why not? Let's just try this out. And so, the first, so my friend who I paired up to do this with, we met each other in China, and he was the one who brought in our CTO. And so it was only like after 3, 4, 5 months, so we started at the end of 2018, I believe. And then after 4 months, we sort of, we became a validator, and we were like sort of doing proof of stake. And then we realized, okay, now the network is secure, but why are there not many transactions? Where are the dApps? We looked at Ethereum and we're like, okay, where are the dApps? I mean, there are some dApps, but where are the people? Where's the adoption?
Yeah.
And what's going on? And so, we played about with a few things. We did, 1 or 2 surveys. We spoke with dApp developers, and we realized that, hey, there's a huge opportunity in really solving, these user experience pain points, but also the developer experience pain points as well.
Right.
And so we eventually went out to sort of solve this, and sort of said, okay, hey, let's go into meta transactions and, try and build, a Stripe for crypto.
Interesting. Yeah, hearing this, it sounds, I mean, I want to ask kind of like what differences you felt there were between building a more traditional tech company and then a blockchain company. But hearing this story, it sounds a lot like any traditional tech company, where it's like you start off with, some work in some sort of area, and then the deeper you dig into it, the more you realize like, oh, there's an issue here. And then you dig a little bit deeper. Oh, that's why that's happening. That's why that's happening. How do I just get good at this, and let's try that? And so in a lot of ways, it sounds very similar and familiar in that sense. Did you find, like, what was the most valuable thing that you found in terms of building this company, in terms of building Biconomy?
Valuable, that's a good question.
In terms of experiences and like the people you've met, that kind of thing, in terms of value.
That is a good question. I would say that the valuable thing is I would say it's essentially the innovation and the community and the people who sort of drive this. So it's not like a key. So it's like all of these 3 have, like, in a way, blended in very nicely to create such a very interesting environment for, people like us to, like, learn so much more. So you have talented people, and thus, these talented people create some interesting things, and communities come around it. And so all of this just it makes you way more excited. It inspires you. It allows you to expand your network. So I definitely say like this. You could call it an open source thesis, a decentralized thesis, or whatever. As I'd say, it's a very valuable thing that I haven't sort of seen in other ecosystems, because at least in traditional tech, everything is kind of siloed. Of course, recent, let's say, fintech players are trying to like bridge the gap between these different silos, right? But in blockchain, these things are already there, right? Like there are no silos because everything is connected by virtue of the technology. And so I'd say the valuable experience is definitely seeing communities thrive and just tapping into that and learning from
That's amazing. That's an amazing value add. I mean, I've noticed a lot of like the community aspect of the blockchain community that you speak of, and I think I noticed it from like the early days when I first started hearing about it, learning about it. There was always that thing where like if I found someone else within this community, it's like you said, there was like this excitement that always like brewed, and it also instilled my faith in it a little bit more, because when you're learning about it, you're learning kind of by yourself, because it's a huge thing and it's like a huge paradigm shift. But then the more people that you reach out to, that you get in touch with, that are excited about it as well, they kind of like accelerate that excitement. And no, I can definitely understand the community being a value add, because sometimes I think about it too. I'm just like, well, I wonder if the whole community aspect, if blockchain didn't exist, and how would we even go about getting people to like do this, right? Like it's just all so weird. So no, I get that. That's very cool. And what about the fundraising process? How was that? Tell me a little bit about your experience. How long did it take? What did you find that you could find a decent amount of investors and VCs that are there? Because I know that there are some in blockchain. Or did you find that it took a little bit more convincing? Maybe they leaned a little bit more towards traditional tech still, or so tell me a little about your experience with that.
Sure. Before I answer, so my brother and his friend are playing table tennis upstairs, and that create a lot of noise, so I'm going to tell them to shut up.
Okay. All right, no worries.
Alright, guys, 30 minutes. I'm doing it. I'm going to finish in half an hour or so, right? Done.
It's all good. I have my brother's dog here, and he's actually very chill right now, maybe because it's snowing outside. But normally, whenever he hears anything, he starts barking, and I have the door closed. So I was like, "Oh God, please don't bark!" So actually, it's all good.
So regarding the fundraising process, so in the blockchain ecosystem, it's very different to traditional tech, right? When it comes to fundraising, when it's a bear market in the blockchain space, fundraising is tough. It's very, very tough. We tried it, and we actually had to work 10 times harder and try to show a bit of traction before we managed to find a lead investor, and actually the follow-on investors as well before we could close our round. But when it's a bull market, every Tom, Dick, and Harry will invest.
That's
and
funny.
There's a higher valuation, and so it's one of those things where you have both extremes depending on the market when it comes to fundraising in the blockchain space. One extreme when it's in the bear market, but one in the bull. Whereas in traditional tech, it's a bit more balanced in the middle, depending on how the market is. And but I would say, of course, in traditional tech, the getting that first check or lead investor would require way more traction or way more
adoption, usage, revenue, things like that.
Right. Rather than in blockchain, because blockchain is so experimental at this moment. It's more like, okay, we see it as more of a long-term thing, and there'll probably be tokens, and therefore there could be an earlier liquidity event at some point.
Right.
But I would say we were probably one of the only companies which managed to raise an equity round as opposed to just a token only round.
Okay. So explain the difference between an equity round and a token.
Yeah. So I mean, equity round is traditional tech venture where you have sort of a post money valuation and pre money valuation, which typically a lead investor would set. Depending on how the fundraise would go, and a token round essentially would basically be structured in a way where you have your project, you outline the token economics, you sort of set a valuation, or a lead investor will set a valuation, and then you raise funds based on what they call a SAFT, like a simple agreement for future tokens. Mm-hmm. So from there, the investors would basically be purchasing future tokens of that project,
right. Which would be like the equivalent of future stocks and
yes,
the traditional
sense. What we did was it was more of a equity and token deal that we did with our investors. Okay. So
both.
It's both. So they bought equity, but also they will be buying future tokens if we ever did a token raise. Or we issued a token in the future. So typically the valuations for tokens would always be higher than the valuation for equity. This is for most, yeah. So I have seen a couple of deals where you have both equity and tokens being bought, and typically the token valuation would be higher.
Okay, interesting. I didn't know that. And how did you guys?
Are way more liquid, right? Tokens are liquid, equity isn't.
Yeah. No, that does make sense. And how did you guys kind of come up with that? I mean, I guess it takes some creativity to kind of come up with that. Was there a lot of advisory? Did it come from the investors, or you guys kind of had this knowledge before and you said the best idea is to kind of like merge both like the equity economics and the token economics into one and create a deal with our investors?
Yeah, so I'd say it was just, it was I would say a natural progression to that. So, during the bear market, we're like equity only, but then we thought, okay, maybe it's important we add some token to that element, because we do see ourselves, doing a token round in the future. And even looking at, companies like, there are many other companies in the space, which even A16Z, for example, have invested into, where they've done equity and token splits. And it's becoming a norm where token, should be a part of the deal. And because we were very early stage, it makes sense, right? Why not, right? It's not as if we've done so much and there's so much traction that, we're able to say, okay, no, there's no tokens. It's just equity. We'll do a token round later on.
Yeah.
But for us, it made a lot of sense because it provided that foundational structure for us. Say, okay, this is where we are on the equity front, where we are on the token front, and who our initial partners are. So that in the future we could say, will we do only an equity round or only a token round?
Yeah.
And of course, right, like, there are many investors, I'd say, in this space. I don't want to put numbers to it, but let's say an arbitrary 70 to 80% investors prefer tokens over equity. They're like, don't give us equity, we want tokens.
Okay, interesting.
Because they're way more liquid. And so like we've had, like, I kid you not, that some of the funds who invested, some of them have said no twice before saying yes a third time.
Oh, wow. Yeah. It's so early. And in terms of any advice for any up and coming blockchain founders who are trying to understand how to figure out their, negotiating the terms of their deals, where would you suggest they get started with learning about these two types of, economics and how to build that out?
So I'd say first, it depends on the project itself and what it's really trying to create, because you could see now newer projects coming out where they're saying we're going to be this DAO, right? A decentralized, autonomous organization, where it would be basically a community of people creating this project, and tokens are seen as a governance mechanism of basically controlling different aspects and deciding on different aspects of that particular project. And so these guys would just go for a token. It makes no sense to do equity, right? So it really depends on the project itself. But let's say a project is going, they know they'll be doing a token at some point. Depending on the market, like if it's a bull market, forget about equity, just do a token raise, because then you save yourself. Like we had from our lead investor saying yes and us saying yes to the lead investor to closing the round, it took like 4 to 6 months. That's a long time in the crypto space.
Well, yeah, which I was going to say, it feels like a very long time in the crypto space, but then if you were to speak to an idea stage tech startup in the traditional sense, 4 to 6 months is like, I feel like not very long. Exactly. But yeah.
Exactly. So if you're doing, let's say, a token related project, it makes a lot of sense to do a token round where you could easily raise 2 to 3 million within a month. Right?
Wow. Super fast. Yeah.
It's very fast because things are liquid. That's how the space moves. And especially in a bull market, anyone will invest. And this is where you can dictate terms a bit. You can dictate terms in a way where you could choose the investors, you could choose the valuation and negotiate a bit. Whereas with equity, it's a bit harder. So like, because we're an infrastructure company, equity and tokens both make sense. The equity part, of course, will take a longer time to turn around because we need more and more players in the space to say, okay, we need this centralized non-custodial infrastructure to serve our needs. But at the moment, the whole market is this booming, decentralized way of doing things. And so having different token economies speak to each other is probably the bigger chance at play. And this is depending on the entrepreneur or the founder of a project, they need to identify, okay, which one am I going for really?
Would work best for my project. And did you find it difficult to find mentors to kind of help you, mentor you through this process, guide you through this process, or was it relatively easy to kind of speak to? Because I'm assuming there was a lot of mentorship and guidance in trying to figure this out because it's new. It's new for everybody.
Yeah, I mean, I would say, from the existing network that I had personally, I had some people I could ask, hey, like, is this a good deal? How should I go about and navigate through this? And there are so many nice folks in this crypto industry as well. If you were to reach out to someone, they would potentially, respond. And people will help, right? I mean, if you do ask them, people are happy to help. Of course, the more established figures, they're probably so busy, they don't reply to their mums, let alone you asking for help. And so it really depends on who you're asking for help. But the industry is also very tight knit, so introductions go such a long way. And also Twitter is is probably one of the most underrated places for people who don't know much about crypto. If they just go on Twitter and follow different people, they could learn so much and also seek out and build from there.
And build relationships. It's funny. I just from like a mere person as like a part of the crypto community, I've actually made friends with and built relationships with other crypto people on Twitter that I've not met like in real life, but it's just it's true. So I mean, I've learned a lot, but I'm not at the founder stage, at least in terms of blockchain quite yet.
Clubhouse is becoming a thing.
Yeah, it's becoming a thing. I know, you keep telling me get on it, and I'm like, yes, I know. I need to get a new phone anyway, so maybe I'll make my switch back to to iPhone, which I don't want to do, but I just might. And any last pieces of advice for any up and coming founders in the blockchain and crypto space?
Yeah, I definitely say just, be very genuine. Make sure you're working with the right people, think long term, because that's how this industry will evolve. I would say those are the main things. Like, it's all about, the people, your long-term vision and really setting about what you're trying to solve as well. Those are the main ones. I mean, they're also applicable to traditional tech. But with blockchain, people could easily like and it's tight, So you do want to, but in a bull market, it's a bit, it's a bit more laxed because people have extra money
Hmm.
to give away,
Yeah.
and are open to more opportunities.
Right.
So yeah, but thinking long term and just showing traction helps a lot. It goes a long way.
Yeah. And get in during or start building during a bull run because good luck during the bear market.
Yeah, I mean, if you could build during the bear market and you time it in a way where you potentially launch a token during the bull, then that's the best thing you could do,
Yeah.
because then you're just like going upwards in a way, and that's
Mhm.
what we've seen with so many projects. At least there are a lot of projects in 2017 that raised money. Okay, the token came crashing down, but of some of the legit projects, not of course not all the projects did very well afterwards. Um, that didn't bother them. They spent 3 years building, and now they're easily top 20 in CoinMarketCap.
Amazing. That's awesome. I'll be keeping a lookout for this next generation after this bull run. Let's see. And
Yeah,
I
yeah,
do wonder how this bear market will end up affecting these new founders because generally, and I do still kind of wonder. I know that it's going more mainstream. It's in the news. Elon's going crazy about it. There's the whole MasterCard thing. There's a little bit more adoption, but I do wonder if that will all translate into a little bit less skepticism, a little bit more excitement throughout the bear market as well, and not just
100.
during the bull run. But that's just something we're gonna have to wait and see. I mean, who
Yeah,
knows? I think we're still a little early. But
yeah,
then I said that before this bull run started. I was like, we're still early. No one has any idea. Like everybody's completely clueless. And then it like blew up, and I was like, wait. And like I was waiting. I thought like we still need a lot of time for things to get this crazy, but it's exciting nevertheless. Um, cool. Well, now let's get to the fun part, which is what books are you reading right now?
yeah. No, good question. So I just finished the book, the Almanack of Naval.
Okay.
So Naval Ravikant.
Yes. Yeah.
Right? So
And I
there's this
follow the
guy.
Twitter. Yeah.
Yeah, so there's this guy off the internet. He literally just like messaged Naval on Twitter. He's like, "Hey, I just want to collate all your sayings and whatnot into a book.
Read them.
They'll,
Yeah.
they'll all be free,
Yep.
via Kindle, on basic audio, on the audio side, and on the digital side. It will be for free because it's a public good."
Awesome.
Um, and so he literally just went to every single podcast that Naval went on and all the tweets, and he basically collated it in such an easy to read format. Um, and so yeah, and he got the support of Naval, and he went and it was actually gifted to me by my co-founder,
Oh,
and he was like,
awesome.
you won't stress out as much. As okay, here.
I do
So
follow on Twitter, but that's a good point. Maybe I should find the book and read it too.
yeah.
Yeah.
So it's a really really cool book. Yeah. So the Almanack of Naval Ravikant. The book I'm reading now is called Sapiens, and I'm sure everyone has heard about Sapiens and all.
Yuval, yeah.
I haven't. I just haven't had the time to read it. I just bought it actually 2-3 months ago. And I also love history, and so I've always wondered. I just love the concept of knowing and understanding where we are and why we're here, and how one thing led to another. Because there's always a preceding event, right? It's like,
Yeah.
why did this happen? Because of this. Why did this happen? Because of that. And I think this is a really cool way to immerse myself in it. So yeah, I'm reading that, and I have like
Awesome.
another list of 5 books that I'm yet to read.
Yeah, to get
How about
through. Yeah, no, I'm the same way in terms of like there's always a list of books. So what I've started doing is just I read multiple books at the same time now because
you?
I'm always like, yeah. And with Sapiens, I actually listened to it, which was I think super helpful because it's a thick book.
Mm.
But I got through that one. We listened to Homo Deus on a long road trip a few weeks ago. I'm reading The Creature from Jekyll Island, which is a big book, and I'm rereading a non-business, non-tech related book, which is The Sun Also Rises by Ernest Hemingway, which is just a fun book that I just enjoy. It's a novel. It's Ernest Hemingway. I just love that book. So I'm rereading it at the moment. And then I'm also reading Focus by David Goldberg, I want to say. Daniel Goleman, which is it's about focus. So it's an interesting book. So yeah, a mix of things. And in terms of people who are getting started in crypto, or maybe even for founders that are getting started in the blockchain or crypto space, any book recommendations or podcasts or YouTube channels that you would recommend that they get started with to help them kind of ease in?
Yeah. So books, I would say, unfortunately, because this space moves very quickly,
Yeah.
books can become outdated, and
Yeah.
which is really annoying. I would say, in terms of YouTube, okay, wait. In terms of podcasts, there is a really interesting podcast on the rise called Bankless,
Okay.
that talks about the whole DeFi um, sort of movement that's happening right now. That's a really interesting podcast to listen to. Of course, you have the podcast by what's his name, Pompiano.
Oh yeah, the Pomp letter.
Yeah, I forgot. What's his podcast name. Oh my god, I can't
I don't.
remember.
I thought he only had the Pomp letter, but I didn't know he had another podcast
He's
on
got his
the
own podcast. Yeah. It's probably called. I think he rebranded. It's called the Pomp Podcast now. I think. But anyways, it's
Pomp
talk
podcast. Yeah.
Bitcoin, and different aspects in this industry. There are some other interesting YouTube. I know there are really good YouTube channels, but to be honest, I don't follow them as much.
Yeah.
One book which I really liked, when I first started, was called I still have it over there, The Age of Cryptocurrencies. So this was written a couple of years ago, but I still feel it's a very good introductory, because introductory sort of segue into why crypto is important.
Okay.
So it is in essence timeless, in the sense where they discuss about the past and why right now it's relevant to that. If they were to rewrite this, it would be even way more impactful, just because there's more evidence. There's more evidence for them to sort of back up.
Awesome. Interesting.
So the age of cryptocurrency is really cool, yeah. And if you're a very, very sort of economics, type geek, or you like understanding, macro and micro, the one book I'd recommend is Currency Wars. It's right there.
Currency Wars.
Nice.
It's
a really, really good book. It's not for everyone, but I loved it. Yeah.
Interesting. Cool. Okay, I'll have to link those and find them as well. And any interesting young new crypto projects that you're excited about, other than Biconomy, of course?
I mean, every project is young and exciting.
Yeah, that's true. They are all very young. Some less exciting than others, but yes, they are all very young and quite exciting.
I mean, I would say one project which is kind of like 2 to 3 years old. Of course, we're kind of biased because they're a partner of ours. It's called Polygon. They were called Matic Network before, but now it's Polygon, and so they've rebranded and now sort of, I'd say, pivoted in a way where they're trying to now create basically the internet of different chains on Ethereum.
Okay.
For the sole purpose of basically providing interoperability between all these like different L2 solutions, and essentially sort of being that aggregation layer for dApps, which is really cool. And I find that like an interesting concept and a huge ambitious target as well. I'd say another very young project actually is called Aavegotchi. Aavegotchi is like a non-fungible token and DeFi game as well. So it's a really cool sort of. I love games, but I haven't really played a lot of blockchain games. But when I read their thing, I was like, okay, this is something I want to play.
Cool.
So it's something that I think they're launching in February. Yeah.
Awesome.
Yeah. So yeah, I mean, look, there are so many. Like we could keep on discussing, and I haven't gone into the DeFi sort of world, but there are so many.
Yeah. No, I got started on my research with DeFi in September, October, and I've been slowly getting through it, but like mostly on like the automated market maker side, kind of like how the technical bits of this will start to work. But in terms of NFTs and all of that, like, yes, been understanding, but haven't delved deeper into them. I mean, I'm not a technical person, but I do enjoy reading the technical aspects of these
Yeah.
projects. And so I feel like it just takes me longer to kind of like break them down, digest them, understand them, and then be able to explain them. But it's like, yeah, I always have to be like, okay, one thing at a time. But DeFi is going to be very interesting. I mean, I think everybody knows that. It's not saying anything new here.
Yeah, no, absolutely. So yeah, I mean, Aave and Curve, they're young projects, but like super big now.
Yeah.
Those are always super interesting for anyone to look into. So I'm actually like things I'm looking at right now, because it's also part of like we're sort of like just studying different models, looking at 4chain, Balancer, Keep Network, Keep a DAO, and just seeing all of these like different models, I'm just like mind blown. When I read each one, I'm just like, these are so cool and very rarely understood.
Yeah.
That's how early we are.
Yeah, that's true. Yeah, in terms of people understand, it's true. And I think that like one of the things that I've been finding is there's so much happening, and like you said, everything is so exciting, and you want to learn about all these things that, in a sense, I feel like it's overshadowing my excitement for the traditional tech companies. Not that it's not exciting when somebody starts a company; it's always exciting, it's always amazing. But now that we have this whole new frontier, it's just like you almost can't like look back. You feel like, wait, but this is like the future. This is 10, 20, 30 years from now. And everybody who's building traditional tech is building for today, or is building for 10 years ago. And you just start to get into this mindset like, it gets difficult, but it's still all exciting, I guess.
But then there's also this thing where, as being a founder, you don't have time to research, or you don't have time to, like, your research is from the work that you're doing.
Right.
But some of it is still like company work and hiring. I saw a tweet yesterday that said, being a CEO is basically being a glorified recruiter, which is, and it's like, I really want, like, if I didn't do Biconomy, for example, I spent time only like literally sitting down and researching projects. Would my alpha in terms of returns being like super high just because I got on things early, right? And I know that I'm able to understand these concepts early enough, that it could have been the case, right? So it's like, even for whoever wants to get into this space, you need to like also think about, do I really want to like just sit down and research and be part of communities? Is that better suited for your time, or do you want to be an operator? Like I definitely want to be an operator. I definitely want to be building something and also researching at the same time. I don't think I could do like just research the whole, I mean, maybe at some other point in my lifetime, why not? But right now, for me, it's the best time to build. And whoever who wants to get in, 100%, like think about that and see where you want to, what you want to do.
That's actually, I can understand that completely, because I felt that for a very long time. I mean, from the operator side, it's always been like something that I've wanted to do, but it never manifested, just because there was never anything that I felt strongly enough about, because you have to be like, this is the thing that I'm going to do, because it's going to take everything. But from the research side, in terms of like creating alpha, not that I manage anybody's funds other than my own, but I've noticed, especially in this bull run, that in all these years of doing research, and a lot of it started from applying for jobs that I actually never ended up getting, but now I'm reaping the benefits from all of that research that I ended up doing for those things, and it taught me how to do that research. And now I'm seeing like, having researched all these projects in the past 2 to 3 years, my entire portfolio is made up of like me being able to spot where these things are coming from, and like they're really truly the only ones that are having like a stable return in the bull run. And I'm like, this is interesting. So whatever it is that you're doing, even when it feels like it might be a waste of time or whatever it is, I'm starting to see over the long run, you do start to gain that, not just the knowledge, and the profits do start coming in, which is exciting. All right, last question. Where can people find you online?
So you could easily find us at biconomy.io. I'm also on Twitter as well, and LinkedIn. So you can find me.
Cool. And the podcast Encrypted, right? You're the host.
Great.
Awesome. Well, thank you so much, Ahmed. It was so good to chat with you, and I'm really excited. And thanks for joining me for coffee. No, that
Thank
was
you. Thanks a lot for the coffee.
yeah, of course, no worries. Yeah, again, thanks so much, and I'm excited to see what happens with Biconomy and to continue to follow you guys.
Awesome. Thanks so much. Really
Awesome.
appreciate the time.
Of course. All right.